All right, good early morning. Peoples, I wanted to go back to MSTR comparisons on funds. I had touched on MST, I touched a little on IMST, and I touched on MISTI, but now I'm adding MSII from Rex, which has launched. So what else is coming? We don't never know how soon, but I think Round Hill should be here before long, and Granite in Yield Boost. Um, what else about these funds? Well, some new things. I dug into IMST from Bitwise a little deeper, and there are definitely a few things that I think I can fully explain to you, some nuances. It will be very interesting to watch. So who pays when? Well, EOMax pays monthly. That's no surprise for Misty, right? They have a lot of weekly payers. So Misty pays monthly. Defiance is MST, which I own some. So I mean, I own Misty as well, but I own MST so that I can sort of experience it. Not a lot. Rex is MS2. They have an NVIDIA, a Tesla, a Coin. Now, they're most famously known for FEPI and SEPI, and FEPI is a monthly and has done really well. But it owns the underlying, writes covered calls against it. This Rex fund, well, let me go in order and then I'll cover it. So you guys know a fair amount about Misty, but I never know who tunes into this, so I'll just do a little teaching. So yield max, I always say, what are they optimized for? Maximum yield. Nice name, right? At least it does what it says it's going to do. So maximum distribution yield through option frequency. Now, a little evolution history, and I noticed I watched some other YouTubes, and I don't think they fully understand that at least Misty has gone to spreads. To me, spreads give you a little bit. Let me give you my percentage thoughts, and these are sort of checked but not fully, perfected. So if somebody says, well, that's not true, I saw blah blah, it's just like the downside, if I can spell it right. Downside on a Misty fund is typically, people will say you're exposed to the full amount of the downside and only a portion of the upside. Generally true, but because you are collecting, the calls, you're writing calls, and those will not be um, called out or caused a problem, so you'll collect the income on what you wrote. So that's why it's 5, 8%. Hard to know, but basically, you safely can say you're going to fully participate in the downside. Even if, 90% is participating in the downside, 95% is participating. Now, in big up moves, I have seen only a third of the capture. So I'm safe. I just say 35%. But since they've gone to spreads, theoretically, depending on how you spread the calls, what is a spread? It's sell a lower price call to collect the premium and hope you don't run by it, then buy a call, okay, with a spread value, same expiration, same strike price. Sorry, not strike price, same underlying and same expiration. So let's say that something is trading at 300. I sell a call at 305. And I'm saying I don't think it's going to go above 305, and I'm going to get $3 for that call. So I hope it only goes to 305, and even if it goes to 306, I buy it back for $1, and I keep two of the premium. What happens in these Max funds and anybody doing a covered call, you're forsaking continued upside by writing a call and limiting your upside. Now, if you or I do it, we don't have a synthetic unless we create one. The synthetic is, buy a call, sell a put. you're fully 100% engaged on the upside. So what happens is if you get massively run by on your sold calls where they're not a spread, then you will lose almost all of that money, right? You will lose the majority of that money. But you have the synthetic to take it against. So let's say it takes 90% of the synthetic away because it just went up too big. Okay, at least you had a little bit of income, but it severely limits, the upside. So the spread says, well, when I run by it, let's say they use a 10-point spread, which is very popular. Okay. So when they run by it, it takes a 10-point run by. If you only run by at $5 and you collected two or three, then you're out $2 instead of making any income at all, or $3. So it takes you a while to get to the 10 level, $10 above. So, giving my example of selling at 305 and then you bought at 315. Well, if it ends at 310, you got $3, but now you lost $5. You lost the difference between the 305 and the 310. So you lost 5 and they gave you 3. So you had a net loss of 2. Even at 310, you're not beginning to make any money on that call that you bought. It has to go fully to 15, and then at more than 15, you start making money. Well, that also gives you a bigger loss on the call that you ran by, right? So it has to be really extreme. So I'm in favor of tighter spreads, but tighter spreads cost you more money. You have to pay more for that in closer insurance. I call them insurance when you have spread. So a lot of times, if you're successful on the call you sold, then in a way you wasted money for the premium on your insurance, and that's why they go out further. But again, so it doesn't always change it. I give this a subtle 35% to 50%. And 50% is giving them a lot of credit. Okay, many times they'll stay at only 35% in massive up moves by the very nature of how this thing's constructed and maximized for weekly income that in turn turns into a good monthly distribution. Okay, so what's Defiance doing over here? They really don't use any other leverage. I mean, options are leverage, but they're really one-to-one with MSTR. All their calls are written on the baseline MSTR. So if you go over here to Defiance, they're paying weekly. So they're clearly writing calls, okay, at the weekly levels. But they say they're balanced growth and income because they can choose to write or not write a certain percent of calls. So can yield max in that essence, right? That once they create the synthetic, let's say it's 20,000, buy the call, sell the put contracts. Normally what Yield-Max has done, but I see them varying it slightly. They would write that same 20,000 contract sold calls and then some bought calls. And so they would be evenly paired. It's basically maximizing the fund flow, the money coming in. So they're desperate to create yield and keep new people coming in. And that's worked out really well for Misty. Not for all the funds, that's for sure. So MST is saying, hey, we're going to leverage, we're going to maintain 150% to 200% leverage. So what I'm going to do down here where the green starts is I'm going to go through three scenarios: a big up market, which fund does the best, a generally flat, slightly up, a little bit down type, who wins in that scenario, and then what happens to most of the funds and who wins, who loses in a big downturn. So I'm going to give you my opinion based on how I understand the inner workings of these funds. Okay. So MST is not looking to pay the same yield, but I wouldn't expect them to, that Misty does. And then on my next tab, after I've talked about all these scenarios, I'm going to go show you day-to-day trades for all four of these. Now understand, IMST I think started April 3rd and MS2 is like a week old. Okay. So you have a little bit more. Bitwise has already paid. IMST paid a fabulous $7 payout. Well, but it's $7 on also what, a 40 something dollar stock. It's not seven. You wouldn't see Misty pay $7, never has, but it's paid $5, I think. And then Pulte, because it's a 50 and $60 stock, you've seen $7 payouts in that stock. All right, so I don't know if Bitwise can maintain that. So I got a lot of thoughts on Bitwise and a lot of little nuances to tell you. So MST, what we have seen, and I'm going to show you in the daily details, when the market turns down due to that heavy leverage, it goes down greatly. I mean, I bought some at $20, and the next thing I looked, it was like $17. Didn't, it's a small amount of stock. And I want to get a feel for it to see if I want to utilize it in my portfolio more. So on Rex, this is a new evolution for them. They want to pay weekly. Remember, I said FEPI and SEPI and some of their products have done well, but those are monthly and they're only underlying, like 15 tech stocks, and then they sell covered calls, if you will. So here, what they're saying they're going to do is optimize for balance, in other words, growth and income. And maybe they're doing that because their income isn't competing with Misty at this point, okay? Because they haven't paid anything. Up here at the top, I give you ongoing yields here and here for MST based on 3 payments and based over a period of time. And this is only based on 1 payment. So I fully expect this to come down some. But it'll be interesting to watch. So MS2, based off of MSTR, should have a payday soon, right? Another 2 or 3 trading days, and probably Wednesday, I think they might be declaring. So this one is interesting. So they use three option strategy. What do I mean by that? They put on a synthetic, similar to what Bitwise is doing, similar to what YieldMax is doing. And then, the best I can tell, they only sell a call. They're not yet doing spreads to try and have that insurance piece. And probably on a weekly, that may make sense. I mean, you're exposed. And again, it's unique situations where that insurance really pays off, guys. It's I have seen a couple of times where the underlying started moving, and I've seen the fund manager in Pulte and Coney, because I've been covering those, especially in Pulte, go out and sell some of the insurance when they even during the week, right? They bought them and then the insurance went way up in value where you didn't know if expiration it was going to hold that value. It just had a lot of premium, and so they sold it for a profit and then put a lower insurance on. All right, so what's interesting about IMST is the alpha portion of Bitwise. The alpha group is headed by sort of a rock star, superstar in crypto, and he's been with several other firms. Young guy, but impressive, background, who says they're going to dynamically adjust. Okay. Well, he wouldn't be the first, but the way they say it is they're promising something special. So we all just need to wait and see if that in fact happens. There's only so many things you can do, but let me give you a few ideas of what they mean by that. Okay, so right now they're too new to fully assess. Strikes dynamically adjusted. Let me tell you what that is. Most of these environments, YieldMax and Bitwise and even Defiance for some of that, I don't think Rex is doing it that way. So when you're in the flex marketplace, I've talked about this in the past. So this is for institutional players, not for you and I in retail. So if we go out and we sell a put in retail, we have to worry about being assigned if it drops below near expiration or even before, and the counterparty wants to execute their profit, you'll get put that stock. Okay. Well, here, remember, they sell a call I'm sorry, they buy a call, they're going long, so if that in the synthetic, if that underlying moves up, they're going to capture a lot of money. They sell a put. If that stock goes up, the put gamma will decay greatly and they will make a lot of money, right? So you're making it on each option, and then why you buy and sell is you buy one and sell one because now you're collecting income that helps you on the buy side. So you're using a small fraction of the fund, which they have to do, okay, because they're single stock funds. They cannot have more than 25% of all the capital they have deployed in that single stock. So by using options, they can have 12%, right? And then the rest all sits in treasury. So that's how they get around it, guys. And then when they sign up for this flex marketplace, it has huge volume requirements. Like, you need to do 150,000, option trades a month or something. So you look at their quantity, you would need 100 million or something to start doing. I mean, some of their funds start smaller and maybe they'll only do 5,000 or 10,000. But when you start doing in that on these stocks, that's a lot of capital. The average retail guy's not doing it. Now, there's some big players that come out and buy Misty and buy, some of these others as they develop. It's not uncommon to see somebody. I think I had up to 7,700 shares of Misty at one time. But there's people with 20 or 30,000, I think, and maybe more. So when you get somebody with that kind of volatility and those premiums and that kind of a pay, people are willing to chase that. All right. So back to IMST and Jeff Park. So Jeff Park is saying they're using the synthetic model where they buy a call, sell a put. And then, but what they're saying is, hey, we've watched Misty and they're frequency based. They're out there every week writing, and they're writing like crazy, and they get run by sometimes. But what I haven't heard mentioned is, yeah, they have a little bit more of a safety net with the call spread approach instead of just a covered call against a synthetic. Okay. So by buying that insurance, it does help, but it only helps in the extreme situations. All right. And it costs money. So if they just win their weekly sold call like they used to and didn't get run by, they do have a little bit of additional expense by buying those high priced calls. All right. So Jeff is really saying that they're going to dynamically adjust. Okay, let's go down to the bottom and I'll tell you what that means to me. Whereas when you hear that, what does that really mean? Okay, so let's do that. So here's my take. Oh, and so I mentioned before, Roundhill and Granite are coming. And if you know of somebody else that's announced they're playing, and I'm sure there are, just put it in the comments, guys. Thank you. When I did the BTC, you guys helped me. I think with Biggie or Baggy and another one, and then somebody even mentioned BCCC. Okay, but that one only has like 2 days of training. But so what? I've already thrown all those in, and I'm going to start running these comparisons every week or every 2 weeks, so they get updated and you see how they're performing. All right, so here's my take on how these funds will perform in three different markets. Let's take the big moves up. Misty. Okay, Misty performs the worst in a big upside moving, capturing, in my opinion, at best 50%. Only with sold calls and some bought spreads. If there was a big move up, like 20% in a week, 12% in a week, and the next week was another 10 or 12%, then they got run by their calls and they took a lot of premium away from the synthetic. They were lucky at best if they got a third of the overall gain that the MSTR, the underlying, got. Going to the spread gives them in that scenario maybe a 50% ability to hang with the underlying. Okay. So they're going to underperform, but they're going to pay well and their NAV's going to go up in a big up move market. You're buying this, you should always be bullish, because if you're not bullish and a fund performs poorly, then your distributions are going to decline because your NAV is going to erode, right? And people always say to me, Bruce, don't talk so much about NAV erosion. That's not the important. It's house money. It's get well, it is important because yeah, everything goes down sometimes. All even bullish moves have bearish counter moves, but you want higher highs, okay, and higher lows, and then you don't mind going down. And if I got a 90% yield return for the year and I had a 25% NAV loss, I still got a 65%. If I can get 65% a year, that's fabulous. So I get it, but it's not okay if I get a 50% yield and I get a 48% NAV retraction. Might as well be in treasuries. Okay. So MST should do well in capturing growth due to its high leverage. So MST is going to kick butt in a rapidly rising environment just due to its leverage. Income, it's not income oriented as much as it's leveraged oriented, and it pays and pays weekly, so it's drawing people in. So it's still going to write calls. Okay. How about IMST? While on face value, it's very similar to Misty. It uses a synthetic and it sells calls. I didn't find anywhere that it says it sold spreads. So I need to go look at their holdings, and then I'll be able to see if they're long any calls that are higher than the calls they sold, and that'll indicate to me it's a spread. I think I did it once, but honestly, right now I don't remember. So that's a to-do for me. All right. They also talk a lot, Jeff Park, other people talk about the dynamically altering their call strategy to adapt to maximum growth and income, trying not to get overrun on the calls. So I interpret this, and I like it, to somewhat of trying to time the market through technical analysis. Because I'll tell you, I've looked at, back when I was covering more funds on a daily basis and I was all gung ho GDX, GDXY, Yield Max Fund, because I said to myself, I know where GDX is going. Well, GDX took quite a while to start moving. It's really only moved the last couple of months to any degree because gold was soaring, but the miners weren't yet soaring. Now the miners are moving, and now they're moving into GDXJ, and they're moving. The juniors are soaring, and more silver-oriented miners. Well, without detracting you, I interpret Jeff and some of their language to say, if we sense we're in a bull market, we're going to dynamically shift. We're not going to write a week or 2 weeks. We may go out really big and write a month because we want a lot of upside. Now, I interpret that you don't get both. So their income may drop well below Misty, but their success in capturing the growth along with still having some income is indeed big if they're doing what they're saying. Okay. We will likely know, I say in my notes here, in a lot more in 6 months, especially if we've seen some market dynamics to test it. And I don't doubt, knowing MSTR as an underlying, you talk about volatility. That's the definition of it. All right, guys. So who else and what else? What other market? How about a flat market, a little down and a little up? Well, when the IVs are high, now remember, what creates an IV being high? Volatility, implied volatility. So if you stayed flat for 6 months, you'd have a 20% IV or something. So they can't do this for super long periods of time, or the IV is so low they don't get these massive premiums on MSTR. but it's sort of the beast. The underlying is BTC, then it's really MicroStrategy, and then MicroStrategy is leveraged on steroids to BTC because they own so much, whereas their company revenue is relatively small. So, it's a lot of leverage, and so therefore the premiums are massive in general. So you can harvest, and so Misty should do okay here in a flat market. They're going to have gamma decay, and they have no risk of running over their call. If they go out 5%, 4% a week, and the market fluctuates from 2% up to 2% down, then they're going to capture all of that income. Now, we won't capture much on the synthetic. It's not really going to rise. They will get gamma decay, but they'll get it on their call and they'll get it on their put. So they'll keep more of the put premium, but they'll lose almost all because they sold the put, but they had to buy the call. And typically, if it's around the strike price when they moved in, they had to pay a little bit more for the call than they did what they got for selling the put. So you're going to see some NAV is going to slide a little bit, and your payments aren't going to be your biggest, highest payments, but you're still going to get, maximized income from a Misty. All right. So how's MST going to do? Well, MST, since it's leveraged and a flat move, its NAV is going to go down an increased amount. Its payout should be okay, but you're going to lose more in a flat. This thing is tailored with its leverage for the up markets. All right, how about IMST? Well, it should be competitive with Misty potentially, probably slightly less in payouts if they're trying to capture more of the upside and writing out further, their calls out further, and or dynamically adapting. Because you don't usually dynamically adapt for a flat market. You dynamically adapt for a bearish bent or a bigger upside. So that will be really interesting. And that big payment they just made, I'll have to see if they can repeat that. All right. So then the last category, and you should care about this, is a big up move, a 10% a week followed by another 10% or 20% in a week followed. And this happens, guys. Just go look at the chart on MicroStrategy. When it gets moving, it can really move. So what about this is down market, guys. Okay, so they can really move down. And the old saying is that you stair step on the way up and you take the elevator to the basement on the way down, which generally means your downdrafts happen in a much quicker time frame than your up move. If I have an 80% up move over, 4 months, I can have a 30% downdraft in, 15, 20 days. So they're not protected at all, none of these funds. And as a matter of fact, you're going to have the largest NAV erosion on MST because of the leverage. So you can actually go down more than 100%, right? Because you got all that leverage. So again, I want to see IMST, but I don't expect, there's no magic here. There's no magic pills. This is what I always say to people that chase yield. You better be bullish on that underlying. Don't be complaining to me about NAV erosion because you bought something and all you did was, oh, I like that SMCY, I'm going to run out. Do you know what the company does? Do you know what sector it's in? Do you know how it makes its money? Do you think you're bullish on that? Will that last for a while? Are you prepared to move out if the fundamentals, okay, aren't bullish? So that's why you got to know what you own. All right. So those are my stance there. Let's go look at day to day. We'll only have a little bit of time to do it, but I got MSTR here. I took another comparison I did. I had MSTX, a 2Xer. So you got MSTR over here, and this is updated to current. So June 6th, MSTR was up $1.54. Jeez, Bruce, up 1.54%, right? Up like 5.5 points. Not a lot. 368.79 to 374.47. Okay, what did Misty do? Went up slightly higher, went up 1.58, right? And many times people will look at some of these dailies and say, well, Peter, you said that Misty only participates in the in outsized moves, not 1 or 2%. Okay. Oh, and guys, these green boxes, green background boxes with white, they're there for a reason. Those are ex-dividend days where the dividend is subtracted out, and then it's quantified over here. Did I not do? Oh, yeah. Sorry. And then you know what else I did for you guys? And this one should be a green box right there. I left winter in here. I had it in another sheet. Why is that? Should just. All right, let me do this again. Copy. There we go. You can do it, Bruce. All right. So, winter, Misty, and MST all paid. Misty, by the way, and you probably know it, in Group D, they have the inverse, right? What is winter? The inverse of Misty. So you expect it to be down or up and kind of doing the opposite. It doesn't always play out. And then when they both have payouts, that even makes it less. So if you don't put those there, you'll be like, oh, MSTR went down 2%. Why would Misty go down 8%? Well, because it's subtracted its $1.47 right here, right? 22.19. Now, can the fund make that up in a day? Absolutely. Remember, it opens in the pre-market down that exact amount, and then it trades. But I guarantee you this, if you pay a $7, very unlikely, unless there's some, tariff news or some crazy news that just makes the market go up 15% or something, you're not going to recover that in a day. So anyway, $1.50, 154, 158, 145 for Bitwise. I mean, that's fine. It's right in the scenario. MS2, 164. Okay. MST. You'd expect with their leverage, okay, that looks to me like it's about 170% if I figured out the math there. It's 120% more of 150. So it's around 170. That fits. They say 150 to 200. And then what did you do over here in winter? Well, you went down a little bit. That you would expect it because it's going up. Winter buys puts, sells puts. It wants it to go down. It's the inverse. All right, not worth talking about a lot here, at least on the two distributors. But MSTR was down 246. It doesn't have any dividends to pay. Okay, so ignore this. So IMST did well. It's only down $1.70. So it's outperforming, and that happens with Misty sometimes. Let's look over here. Well, this one didn't. This one actually went down more than MSTR, but a single day doesn't make a trend. So Defiance went down 471, and you'd expect that because if they were 200%, they would be going down 492. So it's right around that 170, 175%. So everything's tracking on stuff we know. You can't look at winter and you can't look at Misty because they had ex dividend. Now, these weekly pairs like MSTS, MST are less impacted because they pay once a week, so the payments are smaller. But here's a 241. Whoops. Let's go to a different, because it's almost the same thing. Let's go to this 407. There's a 407 up day. Misty can't keep up. 275, right? So if it was 3, that would be 3/4. That'd be 75%. So it's probably doing 60%. Okay. So it did a little better over here with IMST. So they're doing 72, 73% of the upside that this guy had. All right. Look at MS2. Didn't really, that's an undersized move up on their part. Now, they haven't had a dividend yet. And this is launch, so you can't, you know, this is supposedly, well, this is launch. And then on the first day after launch, what happened in the markets? I don't know why they went down so much because it's only point eight. I don't understand that one. Unless this is a bad data. This may just be bad data on my part, guys. It's probably what it is. But this percentage gain up or down is usually tied. So I'll have to double check that. Again, it's so short a day. That doesn't make sense at 16. All right. So 87, 135 by Misty, 77 here. We'll ignore MS2 for this. And 131 for MST because it's got leverage, right? But Misty did just as well without that leverage. So interesting. You see some of this stuff. Winner didn't really move down. It stayed flat. All right, let's see if we can find something else. All right. Now, only IMST paid, so it's not that relevant. You had a 7.5% decline in MSTR. Nice. There's your 95%, right? Or in the 90s, 676. Look at, oh, IMST paid at 701. So not relative, right? Can't really assess that. Now, you can add that divvy back in and say, okay, it would be, 56, and that's down from 59 and figure out what that is. But we'll let that go. Let's see what MST did. MST you would expect, right? When I touch this, it's showing the formulas. Okay, so 7.5, less than 7, it had a divvy. It's only divvy, so not relevant. Over here, you should be 15 if it was 200, but remember, it fits that 175, 180 range. And what you'd like to see over here, but you're not going to get it, these funds, whether they're inverse or normal, when you have a 7.5% move, you say, oh my gosh, that's when they make big money, right? No. So they're not even at 50%. They're at like 40 something percent, right? 3/7 is it's in the about 40%. Okay. So let's see if we can find another. Here's a 341. Got 306 on Misty. Makes sense. Oh, we got a better. IMST got 408. Nice. When you beat them and it's a fair size move, that's awesome. If you beat them and you're 1.65 and they're 1.48, and not that big a deal. But when I mean, 341 is a decent move. Okay. Look at MST. So they're using 100% leverage. And these guys are, 80% the move. So kudos to that. And they only went down about 50%, 45%, just like they only go up. So they're not really going down fully either. Now they would on a huge up move. Okay. So 70, not too relevant. Let's look at this one, a 473 sell off. Now we get to see. Misty took a 422 sell off. Okay. Less than, there's your 95, 90%, downside. Look at this 268. That's nice. And then you expect this, 170% again, 473 to 813. This is nice. They captured 75% of the up move. But again, it's not that outsized. If this was a 10 or 12% upside move, you probably would only get 60%. All right, small. Here's another 413. Let's check it out. Now, see this right after you see them, do better. There's a 343 on the 413. So 70, 80%. And it only got 0.08. Don't know what happened there, right? We already accounted for. So it seems that these are closer than their quote dynamic adaptation allows, but we shall see. So did they do double? Yeah. They're close enough, 170, 180%. Here's your 50% move, right? They went 50% down of what these guys went up, which is that 35 to 50% range. Okay. Any other here? Okay. Now we get a distribution for Misty and Winter. So it kind of 5.58% up. Okay. Oh, what is wrong with IMST? They did not participate in that up move. Don't know why on that one. MST being double, didn't double, but they're around 165, 170%. Nice move up. And again, this doesn't count because they both paid a $2.30 and a $2.70 distribution. All right, here's one that might be, but we don't have everybody in this, right? We do have IMST and we do have Misty. We don't have MST. So we had a $10 and $10 10.15% move. Misty captured 881. Okay, IMST, you're out, 98, 99% of what Misty did. That's okay. I was thinking, when are you going to get back on the horse? All right. And they took 70%, maybe 68% down of what this went up. And remember, their bets are on the downside. This is wild. This says a lot. 24.76 on the 9th of April. This must have been around some tariffs or something. Relief. 22 on Misty. That in itself is fabulous. I don't know if the insurance spreads, caught on that because I didn't start till about the 1st of May on doing the funds on a daily basis. Okay, and 21% over here. So those are fabulous. You normally do not see that correlation with that big of up moves. So you cannot expect it all the time, though. You really can't. Now, let's see what happened on the down. Look at the volatility. This had to be, oh, well, we're slapping 125% tariffs. Oh, okay. We put a 90-day break on it, to think about it. So 1126, 1060. So again, 95% of the downside. How about 105% of the downside? And how about 50% of the move up that you would expect for winter? But they're not getting the converse, they're not getting 90% of the up of what they went down, which you might think logically. Now here's a better one. Here's an 8% decline, 674. This is positive. They only went down half, right? This is normally you go down a lot more than that. And then look over here. These guys went up 6.72. They captured 80% of that move. 398, 305, 307. That's about what you expect. 70%, 72%. And these guys went about 50% down on how much this went up. We lose IMST in here, so it doesn't matter as much. All right, guys. Hopefully, I'll continue to do this, continue to track this, sum up some things over a month or two, and keep you abreast of it. This is the only way to really know. You can theorize to the nth degree. But I did it based on some strong information and logic and a wealth of knowledge on options. All right, this is Bruce with Targeted Wealth Creation. And don't forget, I'll be adding Roundhill. I'll be adding Granite. I'll be adding anybody else you tell me about that comes out with an income ETF based on MSTR. Not BTC, right? I did a BTC video. These are for MSTR. All right, guys, I'm not a financial advisor. This is not financial advice. Have a great Monday ahead. Bye for now.